Hi, folks. Dan Bird here from the Daily Scan from BreakpointTrading.net. Today's the 27th of January, Monday. Wild day today. Hope everyone had a great weekend. I'm going to get into it pretty quickly here. So let's first take a look. So the topic, of course, is DeepSeek and the market crash today. It didn't all crash, interestingly. I'm not sure if you know, but out of the S&P 500, 350 of those stocks were up today. So it really is isolated to the AI stocks primarily. And we'll look at a few of those. There's other areas that actually went up and other stocks that went up. So, but is the AI bubble about to burst? Could be. With DeepSeek coming in, we can talk about that a little bit. I went over this with Mr. Zuber for those that are subscribers to his channel on One Rental at a Time. We had a conversation about this. So what DeepSeek has done is made the whole process of analyzing the data much more efficient. Rather than looking at everything, they only look at a portion of it, but enough to be able to give you the answers you need and to make it more of a siloed or vertical view of what you're looking for. So that means that it's cheaper to be able to do something like what ChatGPT does. And to be clear, what ChatGPT does is not exactly artificial general intelligence, which is what the overall goal should be. It's basically just taking a whole lot of data and sifting through it to find the answers that you're asking for. And what DeepSeek decided to do is to see if they could do the same thing, find the same answers without having as much data or as much data available at the same time. So that means that they could do it with less expensive chips and less memory, which makes the whole quote unquote AI space much cheaper. Now, that certainly does seem to infringe on NVIDIA space, but we'll see if that's the case as we go forward. I think in the next couple of weeks, there are going to be some interesting revelations about what DeepSeek is doing, and we'll see how they hold up to that analysis. All right, so I am not a financial advisor. I don't give you advice on what to buy or sell. You have to understand your own risk profile and do your own due diligence. This is for educational purposes only, and past performance does not guarantee future results. So let's take a look at what the market did today first. Actually, pull back a little bit, but actually not a lot. You can see how it's run up, looking at the market bias chart, how it's run up recently, and it did pull back a little bit today, but not a lot. And you can actually see in addition to the reds, there are also greens. So we got some bullish signals mixed in with the bearish signals, which caused it to go down slightly, but not significantly. We got a yellow light in the overall percentage and a yellow light in the short term, but medium term stayed green. So in general, it wasn't a bloodbath as some were making it out to be. Now, if we look at individual areas, the S&P certainly did pull back. You can see right there. I mentioned this last week that while we broke out, we have to see if we can hold that, and it pulled back on Friday. And then, of course, went all the way down. Now, it opened below the 21 and the 50, but it closed above it. So that actually turned bullish throughout the day. Huge volume, of course, today as well. So we'll see if that can continue to go back higher, but we needed to take a break anyway. So a 7 to 10% retracement or pullback is actually a healthy thing. 58.50, as I've always said the last week or so, 58.50 is the key. If we break through that, then we could be going down here to 56, 55, 5600. But either one of those would still be a healthy pullback and something that we need in order to go higher by the end of the year. So we'll keep an eye on it and see what happens. Now, the NASDAQ is where most of this resided. And you can see it gapped down, but closed today below the 50-day. Now, it did come back from the open. By the way, it's red, which means it was lower. It's clearly lower. But it's an open candle rather than a closed candle. And I think I'm going to do candles tomorrow on the Technical Tuesday. But the easy way to think about this is an open candle is like a window shade that you've pulled up. So that means it opened down here and it closed up here. So you're pulling the window shade up. A closed candle, on the other hand, is it opened at the top and it closed at the bottom, which means you're pulling the shade closed. So even though this is red, which means it was lower than yesterday, it ended higher than it opened. So it actually had a bullish day intraday, even though it opened much lower than Friday. So, but it's still below the 50. So it certainly doesn't look too good, and it may still have more downside left in it. It's actually back in the channel as well. So I think there's probably more downside to come. We'll see what happens, especially with the Fed meeting coming up on Wednesday. I don't expect them to do anything other than talk about what they might do in the future. And if they are hawkish in what they say, that could be another catalyst to send the market down. Now, I think the market has been looking for a catalyst to go lower anyway, just because it's run up for quite a bit. So again, this would be a healthy pullback if it pulls back down in this area down here, say 20,000, somewhere in there. That would be, we're at 21, we made it roughly to 22,000. So 2,000 pullback would be about 7%. If we came back here, actually that's about 5%. No. 22,000 to 2,000 off, that's about 7%, 7 or 8%. So that would be healthy if that were to happen. Now let's take a look at technology. That's the one that took the biggest hit today. You can see right there. Looked like it was trying to break out until Friday. It was pulling back and already gave signals Friday that it was going to pull back and gap down again. Actually had both a short-term and a medium-term down signal today. So both of those were down with huge volume. This one, again, could come down here to the 200-day moving average along with everything else. But if we look at communication services, it actually ended higher. So it had a good day today. And it had a medium-term up signal today. So like I said, we have some that went down, but we have others that actually went up. If we look at Staples, Staples had a huge day today, huge up day, had a short-term up signal. And it's above the 50-day moving average. So if we look at, let's look at the relative rotation first. So these are the sectors. And you can see this is, as of today, discretionary and communication services still in the leading area. And technology definitely made a right-hand turn heading straight down now. And the other ones were still heading over towards the left, except for healthcare, which actually had a fairly good day today as well. Healthcare is moving up to the right. So these are the sectors themselves. And you can see right away that it was mixed. It was a mixed market today. The S&P is right down here. So everything above this outperformed the S&P. The S&P was down roughly 1.5%. So all of these other sectors outperformed. Healthcare, Staples, like I just talked about. The ones that underperformed, interesting, utilities, the NASDAQ 100, of course, and technology, the only three that underperformed. So in general, even though it felt like a big sell-off, it actually wasn't really a big sell-off. And if we look at some of the utility ones, Constellation Energy, which had been doing really well, big, huge drop today as well. Of course, this is conventional electricity, which is tied to, it's really been a proxy for AI. So you would kind of expect for those to drop as well. The other big one that has been gone up all year is VST, Vistra Energy, and it too had a huge drop today. Basically gave back a whole month all the way to the beginning of the year. So it's sitting right here on a key support level right now. So you might think that these are not looking good, but if you wanted to get into some of these, then maybe it's time to take a look at them. In fact, if we look at, let's see, this is all of the Magnificent Seven, looking at it in what's called candle glance. So stock charts allows you to take a chart list, and I have one for Magnificent Seven. These are the ones that I track in the trend model. And you can put it in a candle glance mode, which puts them all side by side using a specific chart style. And I'll make this a little bit bigger, and we can step through each one. So the key things to watch is the top panel is accumulation distribution. So if it's moving up, then it's being accumulated. If it's going down, it is being distributed. Like Netflix actually has been going down even though the price has gone up. And the bottom panel, the middle panel is the price, and I put a zigzag on there so you can quickly see whether it's creating higher highs and higher lows, or if it's going sideways like Google, creating a distribution phase possibly. And the bottom panel is its industry group, or how it's doing relative to its peers. And the horizontal line is the 0 point. So if it's below that horizontal line, then it's underperforming its own peers. So there's Google. Google had a bad day today as well. But if it's above the 0 line, then it's outperforming, like Apple is outperforming its peers over here. All right, so those are the three things that we'll look at. You can see the moving average is the 21, 50, and the 200-day is the dashed dotted line. So there's Google in the upper left. It had been doing well. It's going sideways for price, but accumulation distribution is starting to break down. Amazon is still looking great. Even though it pulled back a little bit, it actually ended the day pretty well, and it's outperforming its peers. Apple is doing really well for accumulation, even though the price has been underperforming. And you can see it made a lower low and now might be trying to make a lower high. So we'll have to watch that. It needs to get above the 50-day. And it started to underperform its peers on a moving average basis. So this is the 50-day moving average, but it's still above 0. So it's outperforming its peers in that case. Meta has been going up with accumulation distribution going sideways. So people are just sort of watching it, waiting. It's starting to outperform its peers. Microsoft over here, it's got a lower high now, lower low, lower high. We'll see what happens. Underperforming its peers in the software group. So Microsoft is going sideways for accumulation. NVIDIA right here, this is the big one for today. And now you can see that it is now made a lower high, but that's the first one. So it had a higher low, but then it made a lower high. So this obviously is going to be a lower low as well. So if that continues, then it has completed its distribution phase and maybe starting its markdown phase. So there's NVIDIA versus its peers. It's very close to equal to its peers. Tesla has been doing really well lately. Accumulation distribution, the price is sitting right up here near the highs, right on the 50-day moving average, and it's outperforming its peers. Netflix had been doing really well and still is doing well on price, even though accumulation distribution is falling off, which means Wall Street might be positioning out of Netflix, and it's outperforming its peers. Costco, you can see each of these. Costco, Palantir has been doing fantastic. So there's clear accumulation and clearly outperforming its peers right there. It looks like it's perhaps putting in a distribution phase, going sideways right here. It's an up and down movement. So we'll have to watch that. See, right now it's got a lower high. This could be another lower high. It's got two lower lows. So this could be a distribution phase for Palantir. The next two really got hit hard today as well. Arista Networks down 22%. Let's see what NVIDIA was down about 17%. So Arista Networks down 22%. It's clearly underperforming its peers below the 0 line. Broadcom down 17%, about the same as NVIDIA. Accumulation distribution going down. So that's what all of the Magnificent Seven look like. And it's really concentrated in semiconductors and perhaps software. But all of the Magnificent Seven didn't get hit. So it's really just the semiconductor group that got hit the worst. We can see semiconductors over here on the market timing graph. And there's what it looks like. So there's the sideways channel. And right now it's below that channel right there with huge volume. So semiconductors is, that could be a distribution phase right through there. And it may be heading lower. If that continues to go lower, it's not going to do well for any of the semiconductor stocks. All right, let's take a look. There's a couple of things I wanted to show you on the charts page. One is we'll look at the January barometer because we're getting close to the end of the month and we were looking really good, but now we came back. We're just below. We're actually closed above the 50-day. and the 21, but it opened below them, came right down to this trend line right here and might be heading back up, which would be good. But if it comes back down and goes below this red line down here, then it will be the third negative or the second negative. We've got one in the beginning, the Santa rally, and the first 5 days was positive. So we want to see how the full month of January ends up. So one more week left, and it's going to be really important that this stays above this 58.80. In fact, the 58.50 is the key level that we need to be watching. If it breaks below 58.50, I think it's going to be going much lower. So that's the key that we need to watch. The other thing I wanted to show is the VIX. We'll see how the VIX is doing. VIX actually, even with the sell-off today, it spiked above 20 right there, but came down. You can see it's actually closed lower than it opened. So everything sort of settled down by the end of the day. The market didn't like the news over the weekend, but I think they're starting to digest it. And they're probably going to understand that while it may impact NVIDIA to a degree, it may also open up a lot more opportunities for AI for other companies, which means they will still have to buy NVIDIA chips, even if it's not the Blackwell chip. They'll still have to buy the other NVIDIA chips, and NVIDIA does way, way more than just AI. So there's a lot more to NVIDIA than just AI. So it actually ended up at 17.9, just below 18. Right in this neutral zone through here. Below 17 is bullish, and above 20 is bearish. So it's right in the neutral zone right now. Also want to show you the trend analysis, weekly trend analysis. We'll look at the NASDAQ 100. And what this shows you is, first of all, the long-term trend is still pretty bullish. And if you carry this back over to this area over here, you can see when the market was going higher back in right after the pandemic. Pandemic is right there. So the market just kept going higher, and you can see what the long-term trend looked like. And it's still roughly, it's a little bit lower than this point, but roughly right where it was. Now, the point where we started to get, or should have started to get worried, was right here in the beginning of 22, which started the bear market, where we had a red bar that went below the 21-day moving average. That has not happened yet over here. We also had the medium-term trend went below 0. That has not happened yet either, although it could be heading that way. So if this is a weekly chart, by the way. So if we're going to get something that's similar to when this big bear market started, then it's probably a couple of weeks away. This week, maybe beginning of February. Earnings are coming up this week. There's a couple of major companies reporting, including Apple, Microsoft, Meta, and one other one, which I can't think of. All Magnificent Seven. So some major companies reporting this week. Earnings is going to be a big piece of it. And then the Fed meeting, of course, might be as well. Either of those things could, in the next week or two, start to push this down below the 0 line. But that's what you should watch for. That's the advantage of all these charts over here. You don't need to look at them all the time. But when something like this happens today, then you want to see what these look like and how far we might still have to go. There's the Keltner channels. So right now it is right in the sweet spot, basically. The 21-day is reversion to the mean. So you can see it got up into the 2x average true range and came back and went a little bit below the mean. That could imply that it's going down to the 3x area again, which would be 20,200, as I mentioned before, that area. We can look at that on the S&P and see where that is. It's right exactly at the mean. So, and you can see it opened down here and closed up there. It's actually pretty healthy. So everything is not doom and gloom today. We're going to have to see how things work out. These kinds of news events usually are short-lived. It may impact the semiconductor stocks and NVIDIA in particular for a little bit longer than that, but I think the rest of the market is actually going to recover. So if this continues to go lower, and right now it opened lower and closed higher, but if it turns around and continues to go lower, you can see 58.50 is right here, right there, right at the 2x Keltner channel. So again, that's the thing to watch. If we get down to that level, then we could be headed all the way down to 5,700, somewhere down in this area. But right now, it's sitting right in the middle. It doesn't look that bad, frankly. We'll see what happens with all of this DeepSeek news that's come out. All right, what else? There's the bullish percent index is another one to watch. You can see the market has just been going higher. There's the S&P, and now it's gone sideways. So there's the distribution phase. It did not come down to the low, which is, again, around 58.50. So that's what we need to watch. However, bullish percent index right here is down 50% from the high. So the high was back here. The market continued to go up, but this started coming down. And it's down 50% also on the NASDAQ 100. Now, a few weeks ago, I mentioned this, and the S&P was down about 35%, but the NASDAQ 100 went sideways. It wasn't down at all. But now they are both down about, or at least reached about 50% down. Starting to come back, but it's starting to roll over right there as well. And then if we look at the sustainability rotation, what you'll see here is there's discretionary versus staples. It had been going sideways. The NASDAQ versus the S&P had been going down, and now it's accelerating to the downside. Technology versus the S&P had slightly gone down. Now it's accelerating to the downside. Growth versus value had already started down, and now it's accelerating to the downside. And the Russell 2000 also could not get back to its peak. I wouldn't call that accelerating. So the Russell is the one that might actually be able to hold up, but it's also heading lower as well. So all of this means that Wall Street's rotating out of the aggressive sectors and into the defensive sectors. And one way you can see that is on the 10-minute chart. You can see there's what happened today. So big gap down, and then it just went sideways. So it looks like at the end of the day, it's starting to come back up. We'll have to see if it can make it back up and break through all of that and get back up through this gap area, back up to 6,100 again. Technology was down, but financials were up. Discretionary was up. Communication services was up slightly. Industrials was flat. And if we look at the defensive sectors, healthcare did pretty well. Staples were up. Energy was flat, and utilities was flat. This is as of Monday. And then materials were up slightly. So it wasn't a horrible day, even though it felt like it was a horrible day. And the NASDAQ, of course, was down 3%. We can look at that on go back to the dashboard, and we'll see it on the dashboard. So dashboard right now, I'll look at Bitcoin in a minute too. Dow actually did pretty well because there's not a lot of technology stocks in the Dow, and the ones that are there are not necessarily AI related or AI infrastructure related like NVIDIA is. S&P was down 1.5%. NASDAQ was down 3%. NASDAQ 100 was down about 3% as well. And there's the VIX. And it did go up, but not above 20. So bonds actually turned around. The 20-year headed back up 1%. The dollar was kind of flat. There's the dollar. Commodities, so gold was down today. There's gold. There's silver. They were down. And crypto, Bitcoin, actually came back. It was down lower than that, came back to 101. So it's still above 100,000. And we'll actually look at Bitcoin on the market bias chart because we can get a better view of it over here. So there's Bitcoin. You can see right there, that's a hammer. So it sold off way, way down here to 98,000. And by the end of the day, it was already back up again. So it is still hanging in there pretty strongly. 106 is what it keeps hitting and can't get through it. So I expect it to continue to go sideways in this area right here. But it looks like Bitcoin catches a bid every time it sells off. So people are taking advantage of below 100K and adding more to it. And then the one last thing is the 10-year yield, which I talked about last week. And I mentioned that it might be forming a head and shoulders pattern. So there's the left shoulder, there's the head, there's the right shoulder, there's the neckline. It's sitting right at the neckline. If it breaks through that, then the target is down here at about 4.25%. about 4.25. So the 10-year yield might actually help some of the big cap stocks if it continues to go lower. And it looks to me like that's what's going to happen. Looks like it's going to continue to go lower. Down the target right now is about 4.25. If it breaks through essentially where it is right now, if it breaks below 4.5, then 4.25 is probably where it's headed. All right, that's it for today. Let me know if you have any questions. Please like and subscribe. Also, let me know if you have anything at all related to DeepSeek. It's a very interesting concept. I think it's going to actually open AI up to a lot more players if what they're talking about is actually real, and it seems like it is. One book that I would recommend, and this, you don't need a subscription for this, but this one right here came out in 2015. I read it back then. It is not fiction. Final Invention, Artificial Intelligence, and the End of the Human Era. I highly recommend it if you want to understand AI a little bit better. Everything that's happening right now in AI is exactly what this book said was going to happen, that it was going to be opened up to lots more players, that there would be regulations trying to control it to make sure it doesn't get out of hand, but it won't matter because as it becomes cheaper and easier for more players to use AI and create AI apps, which is exactly what DeepSeek is talking about, then it's going to become much more widespread and also fall into the hands of bad actors. So very interesting book. I highly recommend it. You can find it right on the books page on the website, right down there. All right, thanks. Let me know what you think, and give me any questions, things that you want me to take a look at. Thanks, everyone. I'll talk to you soon.